They'll be calling you a radical. Hi, Kevin Blanch. I'm going to put up one of my classic lectures. It's called Folks in Finance. But anyway, before I go off on my lecture, which is in radical form, well, I don't know. I guess radical is a state of mind. Who says you're radical, really? It's a rant. My lectures, that's how I teach. That's how I get the point across. Academia has lost its way. As I'll put on my science fiction economics, before I go off on this lecture, I want to clarify some things about me. Number one, I've been a byproduct of this is spit out of my blog and my fight with cancer. As I've marched along and people want to know, Kevin, what are you eating? What are you doing to rehab? Because I have had a remarkable turnaround so far, but I know that I have to keep marching this march. So here's what I eat before I go from this. In the mornings, believe it or not, at the Starbucks in South Ogden right there. If you want to find me, that's where I'm at in the morning. And the reason I go there is there's a beautiful vista right there that looks out over some pretty historical land right there. It's incredible views, and not that I'm a fan of Starbucks, because I'm really not anti-corporation, although he did send me that. The CEO's office themselves that's a whole nother lecture, is why they sent me that, a Brooklyn guy. But as I have oatmeal in the morning with fruit. I have 16 ounces of coffee in the morning. I sit outside, try to suck up as much vitamin D as I can. Then I go for my walk. I pick one of these trails along the Mighty Wasatch every day right here, and I hike. I go a mile or two every day. As muscle has memory, and I know that, as I had plenty of muscle on my body when I got sick from my days with that Hawking trial in my hand for all those years. Okay, then after my walk, I try to use some musical therapy as much as I can. I listen to music every day. You know, some of my favorite old stuff, the beauty of YouTube. You get to watch all those great videos. But I write every day. I get that brain going. I have to get that brain going. And I stay in that routine. Then for lunch, I walk over to the hospital sometimes, which they have a dietitian I'm working with, who they prepare it's a homemade meal. It's almost like a school lunch over there. And I eat that sometimes, depending on what they have. See, they want some lean protein into you, but they want it you getting through fish. They don't want you any animal byproducts. I mean, they've got me off them. I don't eat any of them. So, depending on what they have, sometimes I eat that. It's well balanced. It's good. Or I eat a salad with maybe a shrimp salad or an imitation crab salad. And you'll say, oh, imitation. Well, I try to use farm, believe it or not, that's what we come to. Farm-fed fish. Because we can't eat anything out of the Pacific because of Fukushima. It's so dangerous. Okay, then I walk some more. You know, then I do whatever I do. I write. I'm rewriting my book. You know, I write pretty well every day. Then, like I said, I walk again. Then I don't usually eat after 5 o'clock. I eat grapefruit, a lot of grapefruit, because we know the studies are showing the immune system. Okay, so I drink a lot of juice. I supplement with a lot of juices, you know, carrot juices, mango. I eat a lot of bananas, like it says, because I look like a monkey and I act like one too. So I eat a lot of bananas. And, you know, I'm working with cutting-edge dietitians, and, you know, I'm in the system. As I did this lecture right here about buying my strike price of Apple 580s in April, as I made a bunch of money, I had to ink up and pay for all that to get into. So I'm getting world-class care. I really am. But I'm focused. I use spirituality through my own spirituality, through my mind, through the birds and the wind. I meditate a lot. I walk a lot. You know, I've got demons struggling through my head, but that's good. I'm participating in a very cutting-edge study right now that this doctor found me, or I found him, I don't know, that ties autism and asthma into environmental poisoning. He knows my path. He knows my rants. He knows my lectures. He knows what I'm about. That's why the blue hair came off. As soon as it gets long enough, the blue hair is coming back on. I had to shave it for this study that I'm involved with. It's pretty dynamic, cutting edge. I'll keep you guys posted on it. But I wanted to put up this classic lecture that I've done over the years. I call it Folks in Finance, which I've done this lecture since 1998. Folks in Finance, as she says in her beautiful lectures, Mrs. Jacobs, about using the word folks before 1980 being unheard of in presidential circles, as I've been ranting about that for years and years and years. Can you imagine George Washington or Thomas Jefferson or Abraham Lincoln or Teddy Roosevelt or, Truman or FDR using the word folks? They'd have been railroaded out of freaking town. That's where we are, as we are dummied down. People say that the average IQ is a little bit lower, but it's poorly educated. I break it down in economics, but I want to get into this. I call it folks and finance. It's a classic lecture of mine, and we dive in, and I go from 1980 forward as I dive into the savings and loan scandal, as John McCain, by the way, who almost went to prison for that, as a lot of people, as Keaton went into the Keating Five, he was involved. Those guys went to prison for that in 1980, heavily involved in this town. I wrote my original undergraduate paper in my finance course on that, clear back in the early 80s. That's what I wrote it on. Because I went back to school later, got my MBA, graduated from this school, who, by the way, this school was the #1 school of business in the United States for some very good reasons. And it's not, no, it's off the cuff, it's a piece of shit. And that's why when I got sick, I am not a tenured professor. I was working on contracts. As you guys know, I was finishing my PhD post-ignorance. As I'm rewriting my book right now, my book is very, very serious subject matter, very serious subject matter, as a big piece of this is about atomic veterans and about the Wasatch and leukemia and about the plight of the Mormon and the Fed, and I dive into it. I will disclose things that have never, ever been disclosed. I'm going to ruffle some feathers like you didn't believe, but I do not care. And this is heavily, I've researched this book for 30 years. And I will back up every statement I say. And I will expose things that people will their hair will stand in factual truth. As I have lived this. This is no commentary. This is a documentary. But as my lecture, I go into folks and finance. What happened to the United States as far as the finance world goes? Let's talk about this. Let's go. Folks. What happened in 1980? Okay, in 1980 we had the giant, massive cultural shift from the Great Progressive Movement to the Great Conservative Movement as the John Bircher was become president. Okay, we had the savings and loan scandal melting down in front of our eyes, as it was not guaranteed. The savings loans were popping up like freaking freelance Wall Street banks all over America. They were everywhere. They were not. The money was not backed up. I like to talk about Steve Young. Right here, as he signed that big contract with the LA Express. That was a savings and loan guy from here. Who screwed him. He wanted $1 more than Herschel Walker got, by Trump, by the way, the Washington Generals, but Herschel Walker got paid, Steve Young didn't get paid. It was a savings and loan scam. There was tons of it. The Jazz were bought on savings and loan scam money by Larry Miller. I go on and on. I dig into all this in my book, big time, all the way back even further than this, and stuff that people, for somehow, just don't want to talk about. Well, in 1980, when we did that, it was melting down. It was coming apart at the seams, and people were losing all their money because it was not insured by the government. You had these banks were failing. There were thousands of these scam artists. As Volcker was raising the rate up to kill inflation, by the way, I believe what he did created the prosperity of the 90s. We took our classical medicine and we didn't like it, but it worked. It worked. It worked. It worked because he sobbed the head off inflation. And if you don't believe that is not true, you look at the 1990s when the market was really going up. The market was going crazy. The dollar was getting stronger and stronger and stronger. Everybody wanted peace. The great technology revolution, as this whole thing was, how rich were we in the 90s? Rich. A barrel of oil, $10 a barrel. Gold, what, $200 an ounce. We go on and on. Well, gasoline at $1.20 a gallon. This is in the 90s. Why the markets? Millionaires being made left and right. New technology being born every day right here. As I dive into that right here, as we were the technology hub of the world right here as I stand. As I was in the heat of it, I was teaching in it. I was doing my master's degree in it. In the #1 school of business in the United States right here, as we've fallen off a cliff, as the technology revolution has fallen off a cliff, as it's all fallen off a cliff. Well, in 1980, so what happens? Same old, the byproduct reactionary Congress that we have. Congress decides they need to get it out on the market. The 401k was being born. They used to call them kitchens or cafeterias or whatever, as pension funds were being robbed. As people were going into their pensions, and we always had this fallacy believing that a pension, the money was set aside, and by law it was supposed to be seeing these stocks and sitting these funds. And all of a sudden, when It came kind of, we found out, oh, they weren't putting all this money in the fund. It was, the pension was nothing but a promise to pay. As we assumed, that money was sitting their way, and here come, oh, they're being robbed by crooks and banksters and savings and loan scams, just like today. So Congress reacted. Congress freaking set up the rules of the cafeteria to manage your own money. Your own retirement through a cafeteria IRA as they evolved into 401k, and it was born in 1980. What percentage of the stock people had money in the stock market? 10%. Okay, you have 10% of people have. I grew up in the great cattle futures pits right here. As I was trading derivatives at 14 years old, I like to say, as in east of Eden, as Caleb made the big score. You know, I did the same things at 14, 15 years. I'd go in those cattle futures and they'd trade in cash. Guys standing with guns in there. I remember my uncles and my fathers and carrying suitcases of $100 bills. I mean, millions. They were trading in cash. As I started, I was plastering and doing whatever work I could as a teenager so I could get enough cash to go play them cattle futures as I did it. I started playing futures. I made huge scores at 18, 19. I used to go in the old Elks Building as my very, very hot, beautiful freaking girlfriend was the cocktail waitress there. And her and I had the system of all systems, as them old millionaires from this town would sit in that basement and play poker. I was a good poker player and I could drink. I would sit down there late at night drinking, and she'd walk around with those of hers and flash them to those guys, and she would tell me what they had, and her heart, you know, that was the life. I was wild as wild in this wild, beautiful, magnificent town that we lived in, as all of us. And everybody says, oh God, you know, you look back, you think back of your life in the late 70s. What were you up to? What were you up to, guys and girls with flowers in your hair? You're having a lot of fun is what you was up to. Kegs were legal. You know, it was, smoking weed was decriminalized. Okay, as 10% of people had money in the markets, 10%, they knew it was gambling. They knew it was gambling. As a CEO was paying himself, you know, $10 million. If a CEO was paying $10 million, and the company, even if the company was doing well, the shareholders would descend on the meeting by proxy, which is the corporate structure law that exists today, vote him out. He was gone. CEOs pay themselves what they can today because they can. Because they can. Why can they? I'll tell you why. The birth of the 401k. So as we pass laws, as I like to say, you put money in your 401k and you dream on, and I've gotten in trouble for teaching this at this university many, many times. I've said this for years. You dump all that money in your 401k all through your life, and somehow at 70 years old, you're going to have this big pile of money and you're going to live happily ever after. Not pay any tax on it. You know, I tell you, what are you going to do? Buy Viagra and diapers for yourself anyway? It is a fallacy to believe that you are going to go from 20 years old to 70 years old and not have some catastrophic, dynamic situation in your life that you need money. Death, illness, cancer, where you need to get your hands on money. Yeah, and you're going to say, oh, you're going to come back and you say, well, you have hardships, you can get it out. Try it. Try it. Try drawing it out and see how they hammer you. As I've said it for years, if they don't screw you out of it, the government does not screw you out of it, the CEOs will find a way to screw you out of it. They will. Okay, so what happened? People started using 401ks and the mutual fund manager was born. As a mutual fund manager in contemporized America does this. Window dressing is legal. People don't even know what window dressing is, and that's why we fall into the word folks. We have to give folk. We talk about window dressing. We talk about derivatives. We talk about arbitrages. Max Kaiser has coined one brilliant, genius phrase the other day. He said, the Jerry Sandusky, Jamie Dimon arbitrage. It is so brilliant. It is so genius. Kaiser, I got to give it to you. It is brilliant. It is brilliant. I was an arbitrage derivatives specialist. That's what I did. As I started trading those cattle futures, and we can get into that, folks. But an arbitrage. What is an arbitrage? An arbitrage is the exact same asset, okay, as in a spin out, whatever, and they're traded two separately. One is trading too high, one is trading too low. So what do? You go long on one, short on the other via the options market. Puts on one, calls on the other. And it's going to, either it's going to do this, it's going to do this, or it's going to do this. It has to, because they're the same asset. That's what I did, is I discovered the Palm 3 column spin out. That's where I made fortunes. That's a whole other thing, is the market capitulated that day. Okay, as Kaiser says, the Jerry Sandusky, Jamie, it is a brilliant, genius concept. Are the crimes similar? Yes, yes. Is one going to prison for life? Yes, yes. Is one getting government money and filthy, stinking rich? It's an arbitrage. Is this punishment of Sandusky's too harsh? Or is this not enough? Or is it a variation of both? Well, we know Sandusky's. You can't get a hard enough punishment for the guy. As they say, hang the banker. Hang him as it freaking would be way too nice to that guy. So the arbitrage is this. You don't even have to touch the other side. You know this is beyond too low, the Jamie Dimon. At some point, as the arc of moral justice curves towards justice, Martin Luther King, as we go into that dynamic. So, what percentage by the end of 1999 has money in the market via their 401k? 90%? Close to it. In the 80-something percent. So, as a CEO, he keeps paying himself more and more and more as the dynamic goes forward. Because he knows that the ownership of shares is so homogeneous and so spread out. Instead of having 10 shareholders with 10 million shares each, or 1,000 shares each, or whatever the dynamic is, you have millions of shareholders with 1 share each. So they know they won't show up. They know they won't vote them out. They know they can't. So they do what they do because they can, because that's who they are. That is the animal they become. That's what they're taught in the school businesses. Right here as we taught, as anybody who's gone through a school business in the last 20 years, as you get a banking degree, we play the shoe game. And how does the shoe game you excel? And all you MBA students, all you undergraduate students around America, you know what I'm talking about. Raise fees, raise fees. They pounded in the MBA student, they pounded in the undergraduate student for 20 years. As in this university and all universities, we teach that the risk-free rate of return is the United States bond market, which I've argued for 20 years, 30 years, that is untrue. It is untrue. It is not risk-free. It is not risk-free, and we know that now. It is not risk-free, but we still are the currency of value as people still flock in to buy that because the rest of the world is maybe worse than us. Okay, so we have 90% of people have these. Can't erase it, folks. Okay, 90%. All right, what do the laws of Congress has pushed as Wall Street has got embedded so ingrained with them? Okay, lower interest rates, lower interest, what is the Fed's role? In 1987, we go from the Volcker Fed to the Greenspan Fed. We go from the Progressive Fed to the me, Ayn Rand philosophical. Alan Greenspan is an Ayn Rander. Did his PhD on Ayn Rand philosophy. She's a science fiction writer, as L. Ron Hubbard was a science fiction writer. By the way, who Romney says that's his favorite book. And if you don't think that's fucking nuts, you're fucking nuts. Okay? So there's the philosophy. The Fed's role. What is the Fed's role? To control inflation. That is their only role. Period. That is the Fed's role. Okay? What tool do they use? Interest rates. So, as the dynamic of the low Cinderella syndrome, as it's been termed and called beautifully, rising stock markets, strengthening dollar at the exact same time is the best scenario any economy in the world could possibly have. We had it on Balco, as I like to say, in the 1990s. The markets were raging as the dollar was getting stronger. Wealth was being created so massively in this country, it was unbelievable. Bush steals the election and everything's based on a lie. As Bush comes in, and if you don't think lies matter, think about Scalia on the Supreme Court. Well, not Scalia, excuse me. Roberts and Alito on the Supreme Court. They shouldn't even be there. He did not win. He did not win. And all your conspiracy theories on 9/11. Here's the one thing that you forget to talk about, as you forget to talk about so much. The recount of the Florida elections done by the 7 independent studies, including the Women's Voters League, was due out September 20th. It was due out September 20th of 2001. Am I a conspiracy theorist? No, you don't even want to get me going. You don't want to get me going as, Frontline puts out in 2004, they do their documentary, NSA had bin Laden's phone number in Yemen. They give it out on that thing. As they stayed in Laurel, Maryland the night before they went there, as he looked out over from NSA, by the way, NSA is building the big building right here in Utah. That's a whole other subject matter right down the road. Okay, so we have 90% of the masses in the market. They can't even read their statement. Blame it on the market, blame it on the market. As the market goes down, they pick up their forms, so what do? Window dressing. Now what is window dressing? Folks, window dressing is this. It is legal, just like cookie jarring is legal. What is cookie jarring? Cookie jar and window dressing are evil cousins. Okay, window dressing
At the end of a quarter, a mutual fund manager, by law, legally, he does not have to only disclose but 4 times a year what that portfolio is. You don't know what he has. As I said, there are millions of Madoffs. As Madoff was exposed, but I think if they have a rule putting down the gate, and that is the father to the 2 evil cousins, the inbred father, the polygamist father, is putting down the gate. Putting down the gate, which happened in 2008, which is legal. They throw down, you have a mutual fund, everybody wants their money out at the same time. They don't legally have to, and they don't. And they threw down that you couldn't get out. So it couldn't expose all the fraud on Wall Street for that very said reason. Because there are millions of Madoffs. As they say their money's in there, they go play golf, they use a computer. By the way, the shooter in Colorado, whose father's a Cal Berkeley algorithm guy who cost me my job. As Wall Street has been devastated, guys like me, derivative arbitrage specialists, hedge funds guys, we got replaced by computers. These guys build algorithms. As he was head of FICO, he's an algorithm builder which completely owns Wall Street, as they trade 90% of Wall Street now. That's who these guys are. We have all, Wall Street is run by a couple evil wolves like Jamie Dimon, and the rest of the working class like I was, we all lost our jobs. We got replaced by computers like this guy built. That's why we get the flash crash. They're all saying anal, because investment is not a science, it is an art. That's why when they all do it, everyone does it. Every computer trades the same thing, thus the flash crash. Thus the markets cannot do anything. It is a Ponzi scheme freaking shell game that is ran by algorithm anal scientists. All left brain with no right brain. Okay, so we get back to that. Window dressing. So at the end of the quarter, and many investors traded on this for years, they load up on what you think they would like you to load up. Oh, we got Apple, we got Microsoft, whatever stocks are in vogue at the time. As a study come out in the Wall Street Journal, who's nothing but a holy rag now, a Rupert rag, but before, when they used to do real journalism, as they had their monkeys picking stocks or their wives picking stocks against these managers, consistently beat them, as they used to expose the realities of Wall Street and the shell game and the gambling casino that it is. It is gambling, it's gambling, it's gambling. People say, oh, they're gambling with my money. Well, you're giving them their fucking money. Okay, so they post those stocks in there for just a day or two. Send the statement out and tell them, buy the ETFs, which ETFs are a whole other thing. Leverage ETFs. Think about this. Triple leveraged ETF. You can buy options on some of them. Wow. Whoa. So, okay, so they buy the market, they buy the spiders, they buy the QQQ, they buy whatever, go down, they don't even watch the market. It's the easiest job on earth to be a fund manager. Now, there are groups of fund managers who work. When I was there, and the fund group that I work for, we outperform the market. They still do, as my old boss had recently passed away. For years and years, there are a few of hard workers, but again, we've been replaced by computers, as the contemporary moron in America cannot tell the difference because they can't even read their statement. Folks. Finance it, folks. So you dive into a complicated game as big fish eat little fish. You dive into the complex game, and sometimes you have a fallacy that markets do this. Markets in the history of the world have never do this. Markets do this. As stocks fall 5 times higher than they're raised, as Soros has made fortunes just on that very said theory, as all the mass money has been made in the history of this country and this world is made that way, as Joseph Kennedy made his fortune that way. As did he manipulate the market? I don't know, but he sure called it going down as it washed down, but he was on the downside, shorting stocks, playing puts in the derivative, as Caleb in East of Eden has been done for centuries. But they understood it was gambling. They understood the dynamic. It does not go like that. You put your money in a 401k and just sit back and I'm going to turn 70 and live happily ever after. It is the giant fairy tale of America. It is a giant folks finance fairy tale. It does not happen. Okay, so they window dress, they send it out. You can't even read your statement. So there's no accountability. They're like, our stock's down 40%. I think I'll pay myself $400 million instead of $300 million there. Who's to stop me? And they says, oh, we'll go to your house. Which one? The one in the Caymans? The one where next door to Mitt Romney's house? You know, in my Swiss bank account, by the way, the Swiss bank accounts have been released. As a lot of people don't know this, the lawsuits were filed from 1945 every year by the United States government, wanted Switzerland released. Do you know Switzerland released them 2 years ago? And Obama promised to release them? And the date come, this is about the pressure, and the citizens divided, united, as the Supreme Court. There we go back to the lie. and there go back to the lie, has stopped that because money can buy politicians now. So the Citizens United has stopped that dynamic from him disclosing. They disclosed. The United States government has the top Swiss bank accounts, names. They have them. They came out, and Obama says, well, what we're going to do, we're going to give you 6 months to pay your share of taxes on these before we disclose the names. But we're going to disclose them on the 1st. That was 2 years ago. Still no disclosure. Okay, these CEOs have their houses all, you don't even know that. They don't even live in America. It's like GM. Okay, we bail out GM. Okay, they do another IPO, which we are the major shareholder, us the tax holders. Were we able to get the IPO in the pre-market? No. We had to buy in the aftermarket. Here we own it. Where's our seat on the board? We don't have one. As GM, Caterpillar, all these kinds, there's nothing American about them. They have the American name. They don't make anything here. They don't employ anybody here. They surely don't pay any taxes here, as they're the #1 automaker in China. And it's the dynamic, oh, no more protection, no more protectionism. So there. So from 1980 to 2000, a dynamic shift from a pension fund to a 401k. We go from 10% of people who have money in the market to the dynamic of 80% in the market. Small amounts versus big amounts. Big shareholders versus smaller shareholders. Big shareholders descending on shareholder meetings and guys are gone. CEOs are done. To where the board meetings are by proxy, loving by proxy as I call it, is ridiculous. There is no accountability. So here we go, the Bush Crawford Ranch thing with the black eyes. I'm sure his mother-in-law owned a bunch of Enron and Kenneth Lay, that whole dynamic, as they sit around there. I think that's when it became in vogue to mouse numbers. During the Greenspan administration, the free market fairy tales, to mouse a government number on unemployment, CPI, PPI, all these numbers for the government to buy stocks, to buy equities, QE1, QE2, twist, it was so grotesquely unheard of under the Volcker Fed, under the previous Feds, it was reason to go to jail. I used to say this in my class, the Fed buys stocks. No, they can't buy that nonsense. Oh, yeah. The Fed buys bonds, people go crazy on me. What do you think QE1 and QE2? As they ran out of bullets, slashed the interest rate to force you to the markets. You couldn't put your money in the bank account. What have you been told by every scam? And, oh, you know, I'm a pyramid scheme freaking, insurance salesman. I've dumped into this, Prime America, whatever. Here, mortgage your house, put your money in here because your bank account cannot outperform inflation. So put it in the market. Give us our money, give us your money, give us your money, give us your money. That's what's gone on. So you give them the money and they wipe you out. As Kenneth Lay and the dynamic of it crashing, as you know factually, George Bush's mother-in-law owned a lot of it, and everybody got told to get out and or buy puts, which they made fortunes on it, just like the attackers bought puts on the airline stocks. We're going to trace the money, which the money is very traceable, and it was traceable. You don't think that's ironic? That I'm an options trader at the time. That money is 100% electronically traceable. It's trading in, brokerage accounts. They knew exactly where the money went. Bush, we're going to trace the money and find it. Then all of a sudden, that's because they traced the money and they found out who the money was. Oh! So that's how the process ended. So you go from that to that. Okay, we go around to 2000. So the Fed has kept the interest rate falsely low as inflation started to perk up. Now let's be clear in 2000. Folks, let's be clear in 2000. 2000 comes along. 90% of your money got your money in the market. The market capitulated March 10, 2000, as I was heavily involved in the 3-palm arbitrage, which Bartholomew, who is the same guy who did the SunPower one, who I went to the SEC, I went to Spitzer, I went to Lone, he's a crook. The same people that are on corporate boards are on multiple corporate boards. And I've laid this out, proved this in many lectures over and over. I could give names and address these guys are on multiple corporate boards. He was one of them. That's the day the market capitulated, and we started headed south. Inflation started to raise its head. And we had, like I said, the Cinderella syndrome we had going on. The Cinderella syndrome was a strengthening dollar. 29% of United States equities were foreign currencies. Now what is it, 1%? As we shifted and moved it all to China because of no protection, because who wants to be a part of the dynamic as we turn into the mass murder, fake Christian radical hairspray nation? Who wants to be a piece of that? So, as we go there, in 2000, folks, oil, $12 a barrel. Gallon of gasoline, $1.34. Gold, $235 an ounce. I go on and on and on. When did inflation happen? As we hear all the time, as you morons want to jump into the dollar's going to crash. The dollar crashed in 2002, 2003, 2004. You can draw a line from the invasion of Iraq to the dollar.